Next, we have a presentation from Genex Power with the ASX code GNX. And today we are joined by the Executive Director, Simon Kidston, to tell us more about their portfolio of renewable energy generation and storage projects. Good morning, Simon.
Good morning, Jane. Thank you very much. Look, today is a big day for Genex. In fact, we've released to the market the most important announcement since we listed on the stock exchange in 2015. And that is that our project has achieved financial close for the Kidston Pump Storage Hydro project. And you can see the image in front of you. That was once a very large gold mine, which is now being repurposed to our hydro cash generating machine. And we've got construction underway as we speak, and it's been now fully funded. So Genex is a diversified renewable energy generation and storage company. We've got a proven track record of delivering projects on time and on budget. And those projects are backed by long-term contracts, up to 30 years of revenue security from our renewable energy projects that are currently in operation and construction. The portfolio is valued at more than $1 billion, and we're fully funded to 350 megawatts. And we've got an embedded locked-in growth plan through the development of battery projects and wind projects to drive earnings growth in the short term. So you can see our portfolio is focused on the eastern coast of Australia. It's all focused on renewable energy generation and energy storage. And our flagship project is in North Queensland. It's the Kidston Clean Energy Hub, which has been developed in phases. The first phase was a 50 megawatt solar farm that was built 3 years ago, and that's providing strong cash flows to the business. The second stage in North Queensland is our pump hydro project. That's now fully funded, construction's underway, and that will drive earnings growth over the 80 years of economic life. That asset will be generating cash flow into the market and into our shareholders. We've got the potential to develop wind farms and solar farms at Kidston, but the short-term growth will come from our Baldercombe battery project, which is located in the outskirts of Rockhampton. It's a 50 megawatt Tesla battery project, which we develop later this year. And finally, in New South Wales, at Gemelong, we built a solar farm last year. That project is now completed, is generating cash, and adds further diversification to the business. So the business is all about producing clean energy for Australian consumers. So from a base of 100 megawatts of solar farms, we're leveraging that now to develop and build the 250 megawatt Kidston Pump Storage Hydro project, and there'll be growth of wind and battery projects beyond that. Now that's important because in the economy, there is a significant decarbonisation occurring, and that's backed up by state governments having very clear locked-in renewable energy targets. And you can see the chart on the right-hand side shows you that New South Wales, Queensland and Victoria have renewable targets of between 50 and 60%. They're a long way from those targets at the moment, so we believe Genex is uniquely positioned to build additional projects to profit from the growth of renewables as the economy decarbonises. So it's a very, very strong point which underpins the growth of our projects and our cash flows over time. So we're very, very proud at Genex on our track record. We've developed 2 solar farms, both of which have been developed on time and on budget. Today, as I mentioned, we've financed our flagship pump hydro project, and that will underpin the next phase of growth in the company. The portfolio itself is $1 billion. It's fully funded to 350 megawatts, and we've got a strong growth pipeline of low-risk projects that we can develop over coming years. I think this is possibly the most important slide in our presentation. It talks about our revenues, and in particular, the fact that Genex has long-term revenues that are baked in and certain, and those revenues will grow all the way to 2055. And the reason why we can put revenue guidance to the market for up to 30 years is because the vast majority of our cash flows are under long-term contract. So we've baked in just over $3 billion of revenue between now and 2025. 85% of those revenues are under long-term contract that don't vary based on the wind shining, the wind blowing, energy prices or energy volumes. So they're very, very secure, certain cash flows that will escalate at CPI over time. I guess renewable energy is a very high margin business. 79% of our revenues will fall to the bottom line in terms of EBITDA, which means we've got very, very strong cash conversion, which enables us to have the potential to pay strong dividends to our shareholders over time. So Genex really has a very clear growth strategy. So from a base of 100 megawatts of operating solar farms, we've now locked in the construction phase of our 250 megawatt pump storage hydro project. And we plan to leverage the skills and relationships we've developed in building this business to take the portfolio to 550 megawatts. So that's near-term development opportunities through the development of a battery project near Rockhampton called Baldercombe and a wind project adjacent to our flagship pump hydro project. So I guess the team itself has the ability to now rapidly develop its portfolio. They're low-risk projects that produce strong cash flows and very, very good returns to our shareholders. And our intention is to pay a substantial portion of those cash flows to shareholders as dividends once the portfolio has matured in 2025. So just a little bit on our pump hydro project. This is the project that converts what was once a very large gold mine into a pump hydro project. In fact, it's the first pump hydro project to be developed in Australia in 40 years. It will be the third largest energy or electricity storage device in Australia when it's in operations. It's got low capex. There's lots of jobs that will be employed during the construction phase. And it's a critical development to help the state of Queensland meet its renewable energy target of by 2030. So it's a very, very important project for Queensland, indeed Australia. And Genex is very pleased to have 100% of this project. It's fully funded. And when it's in operation, it will build very, very strong cash flows for our shareholders. So I just want to spend a few moments talking about our growth strategy. We've secured a site in Queensland near Rockhampton, adjacent to one of the biggest electricity substations in the state of Queensland. You can see the picture there. Our land that we've secured is adjacent to that substation, and we're in the process now of completing the development activities that will enable that battery project to be developed later this year. And what we're looking at here is a project with a capital cost of around $55 million. It will produce very, very strong cash flows, and the construction time to build this project is under 12 months. So I guess what we're looking at now is the potential to substantially grow our earnings next year through the development of this Tesla battery project. So these revenues aren't in the slide I presented earlier. Those slides presented our baked-in, committed, locked-in revenues. So we've got very strong upside through the development of battery projects, with the first cab off the rank being the Baldercombe battery project near Rockhampton. Very, very strong, high-returning project for Genex. Wind, we think it's a potential to be also very strong returning for our shareholders. We've secured 2 sites adjacent to the Kidston gold mine that will develop into wind projects that will leverage the infrastructure we have in place at Kidston and the expertise we've developed and the good relationships we have with the Queensland government, the local community, and our financiers. What you can see here is Genex's portfolio. It's a diversified business. It's diversified by geographic location. It's diversified by technology. The projects are backed by long-term contracts, and that's important because it underpins a very, very high level of energy revenue certainty for the business. And those revenues are going to grow substantially over time. So the 2 operating solar farms that are generating cash today provide a very strong foundation for the business. The 250 megawatt Kidston Pump Hydro project is an iconic large project. It's now funded. It's in the construction phase. And when that project comes online, it will add substantially to our revenues. And that project will operate for at least 80 years. So many, many decades after I'm gone, it'll be still producing energy and cash flows to the shareholders of Genex. The growth for the business is all about our battery strategy. The Baldercombe battery project will be developed this year. It's a fantastic, high margin, highly profitable battery project, and that will contribute to our earnings by calendar year next year, 2022. With the Kidston Wind Farm coming on just after that, we've got really a strong baked in pipeline of projects that will grow our earnings over time. So the board and management have substantial skin in the game. The directors are very significantly invested, and of course, there's a very, very strong alignment of interest between the board and all of our shareholders. The business has a market cap of around $250 million, with a very strong cash backing of just under $70 million. And again, emphasising the project is fully funded for its portfolio up to 350 megawatts. So it's a very, very exciting stage indeed for Genex in the business. So what you can see with Genex and what you get exposure to is a diverse range of renewable energy generation and storage projects. The management team now has a proven track record of delivering projects on time and on budget. We can leverage the very strong relationships we have with some tier one stakeholders. The logos are listed on that page. They're the leaders in their field, and we're very proud and honoured to be able to work with these groups to grow the business. The most important point, of course, for shareholders is the revenue certainty. 85% of our revenue is baked in. It averages $82 million per annum every year, all the way to 2055. So a very substantial revenue stream in excess of $3 billion that's been locked in by this business for the benefit of our shareholders. The project and the companies are now fully funded to deliver 350 megawatts, with a growth pipeline beyond that with the battery project and our wind project. So delighted to speak to people today and look forward to any questions.
Well, thank you for that presentation, Sam. That was great. We're running out of time, but there has been quite a few questions coming through about J-Power, so I'll jump into one of them. Is the company considering further partnership projects with J-Power?
J-Power is a really exciting addition to the business. They're the largest energy generation company in Japan. They're the global leader in pump hydro, and we're delighted to have them on board to deliver the Kidston project. We are very keen to work with them to develop more projects in Australia for renewable energy. So we'll have more to say about that later, but they will underpin, we believe, our growth strategy to drive this business to even greater heights.
Wonderful. Well, thank you again for your time, Simon. And of course, all presentations from today's webinar will be available on brokerbriefing.com.
Thanks.